Party like it's 19,999. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of January 16th, 2017. You know, my opening line, party like it's 19,999. Of course, I'm referencing the song from the recording artist Prince, song he wrote back in 1982, which had a bit of a apocalyptic view of the end of the millennia and maybe what would happen as we move from 1999 to 2000. And I think it's appropriate as we look at Dow 2000. And, you know, everybody's wondering, are we going to hit that major milestone, historic and emotional milestone? And if we do, is it over? Or are we going to keep going up? And, you know, I just think about the lyrics from that song, Party Like It's 1999. And it said, I woke up this morning, I could have sworn it was Judgment Day. People running everywhere, running from destruction. You know, I didn't even care. So what's going to happen in the market here? You know, are we going to hit 20,000? And if we do, is it going to keep going up? Are we going to correct from here? There's lots of signs and articles popping up about big option plays in the volatility index and people preparing for a major market crash and all kinds of stuff going on. You know, and in the Prince song, he said, you know, I'm just going to live in the moment. I'm just going to party like it's 1999. Now, we don't have to bury our heads in the sand because we can trade according to the reality of the charts and what's going on in the reality of the markets. And it's really interesting. If you look, we've come up to this on the Dow Industrials, nearly 20,000. We came within 37 cents of hitting this historic and emotional milestone, but fell just short. And it's interesting, we had this big rally, of course, right after the election, starting on November 9th, up to about 19,999, and it has completely stalled and gone into this sideways channeling market for a month now. It got up to this level on December 13th. Here we are on January 13th when I'm recording it, and it is just going completely sideways, going nowhere. What's it going to do next? Well, I don't have a crystal ball. I can't predict the future, but I do have meaningful technical analysis tools. And as I've said over the last several weeks, boy, we're at the top and we're at the end of a very long, very strong, impressive bull market. It's been going on for 8 years. So whether we cross this line of 20,000 or not really isn't that relevant. The market is poised to pull back. We'll know when it's happening. We'll have some advance warning, and I'll be providing updates. You don't need to know to the minute, to the day. You don't need to know what the exact top is. We just need to know when the trend has changed and when the correction is beginning in earnest. Technical analysis tools can give us that, and I'll certainly be providing updates. So let me give you a quick preview of what those signs and signals will look like when we begin a pretty significant downturn. So I've dragged my chart over to the right. Let's look at some historical, just recent history, some pullbacks. And I'm just using some technical analysis from Dow theory. So if you remember the summer of 2015, we had a really significant drop. We saw that coming. Dow theory tells us that a trend has changed when we get a low, a lower high, and a new low. Meaningful ones, and that was certainly a meaningful one there. And then we saw it at the beginning of 2016. We had a low, lower high, new low, and there it went. So we'll see that coming, and we'll be able to predict it when and if, you know, not really if, it's when we get that kind of a price pattern here. Now, price could certainly edge up a little bit higher and do this. I don't think it's going to make meaningful new highs. It may cross this purple line of 20,000. But when we see a meaningful low, and when it can't take out that previous high, and it goes and makes a new low like this, we can expect then that downtrend to continue. Now, will that be the big correction, or will it be a minor correction to this? Time will tell, but there is at least a minor correction coming, and then at some point in the future a pretty substantial one coming, part of a normal, healthy, ongoing market cycle. And when we see this happening, you'll hear it here, and I will provide updates. And it won't be, just one day and like, wow, the market turned on this day. It'll have time. It'll work its way out, and we'll be able to be prepared. And for those who are informed and prepared, there's a lot of profit to be made here. So stay tuned, and I'll give that update. Meanwhile, next week on January 20th, on next Friday, before I do my next update, the presidential inauguration is going to take place, and we've crossed, several hurdles. We had the election, we had the electoral college vote, and there wasn't enough defectors to change that outcome. The vote was certified in the Senate. On January 20th, Donald Trump's going to be sworn in as the next president of the United States. Will the market react to that? Will it go up? Will it go down? Stay tuned. We'll watch the realities. We can speculate. There can be all kinds of conjecture about that. We'll trade the realities, what actually is happening, how the collective market participants are responding to that information, and that will be very tradable. This has been tough. It won't stay in this kind of tight channel forever. It'll move out of that, and it'll be very tradable. Let's take a look now at the other markets, at gold and oil, and see what's going on there, as always. So here's the daily chart on gold futures. It's been a really nice, strong pullback. We had said for a few weeks we think the bottom may have put in this gold rally. We get some real legs. We traded that, made some nice profit on it. It may pull back before continuing up, so it's kind of at a key level here. Let's watch it and see. We'd like to see a bit of a small pullback again, higher high, higher low, new highs, and that would signal a real beginning of a trend that's got some real legs. So let's keep watching that, and of course I'll provide updates on that as well. Here's a daily chart of the crude oil futures. Just like we said in the last few weeks, we're looking for this key level at 56.27 to be broken. Oil's been volatile. There was an agreement made between the OPEC members, non-OPEC members, which include Russia and some other players, to cut production this week. The Saudis have confirmed they're cutting production, but inventories haven't gone down yet. So if these production cuts actually happen and continue to happen, and if inventories do get drawn down, we could see some impetus for increase in price, and we want to see it head up, take out this 56.27 level. If it does that, of course, our projection is it's heading up into the, probably up into the $70 to $80 range. So let's let it break out of this and get going. That'll be very tradable. There'll be some great profits to be made in that. So that's the update for this week. Dow's stuck in a channel. We're going to be watching very closely for when the pullback begins. We'll give an update on that. And we got the big inauguration coming up next Friday. So after that, we'll be able to give an update and see what the realities are next week, and then ongoing week by week from there out. Take care. Have a great week. Be safe in your trading. Use risk control. Keep your winners big and your losers small. And we will catch you on the next update. Thanks.